back to another video, video, video. It is Sunday and the sky is shining, and the sky is shining, the sun is shining around here. Kind of cloudy, not like it matters to you unless you're here. Sunny and cloudy, and maybe that's just a very telling kind of situation, environment for the Bitcoin market. In a physical sense, we see some white puffy clouds on the market. That is the clear blue skies. Um, Fun fact about clear blue skies, people did not refer to the skies as blue very commonly until sometime in the 19th century or so, thanks to a piece of literature. 2 points if you can name what that literature is. And if you're a marketer and you name it right, you're the first one to name it here on YouTube, or you're among the first, you will be entered automatically into a contest I will be drawing and giving one lucky winner, either on YouTube or LinkedIn, a free marketing consultation. So, if you can name that piece of literature in which humanity began to call the sky blue, drop a note in the comment. Now, about Bitcoin, I wanted to mention some things about this expectation that people have been having about this so-called bull run that they think is coming, and all these quote-unquote analysts, financial market analysts, who are doing their best to get their ducks in a row and present information in accordance with their views and their opinions and the lagging information they share, even though if they're real financial analysts, they should know better. And they should know that lagging information is not how we measure or forecast things happening in a market, specifically a market of an asset that is being traded, like a volatile asset like Bitcoin, or frankly any asset on the markets. Right? We use volatility, entropy, probability, and statistics because that is, in fact, what moves the markets. All the funny lines you want to draw and all the lagging information you want to use cannot and will not accurately predict much of anything about the future. In fact, it's so unreliable, and experiments have been done to demonstrate this, you are quite literally better off throwing a dart at a dartboard, or even having a monkey do it for you, or having an octopus guess. Right? It is not by mistake that these experiments were done, and that the data has found that a 50-50 chance is better than voodoo TA, and that the VEPs are used by the companies and traders that actually run the markets, and that is not a mistake. So when you hear all these grand prognostications of what is likely to happen and that the bull run is likely to last until November 12th, 2025, or whatever date they're throwing at you. Some say it'll end in March 25. Some say it'll end in sometime in the summer. Some say it'll end sometime in the autumn of next year. It's all nonsense, people. First of all, do you realize how many people get wrecked in a bull market in long positions? And when I say a bull market, you should know there's really no such thing as a bull market or a bear market. Okay, there's buy pressure and there's selling pressure. That's all there is: buy pressure, sell pressure at any given time, in any given asset, in any given market. What they call a bull market is just an extended period of time. If you look at the higher time frames where that happens, that there's more buy pressure than sell pressure. And what they call a bear market is just an extended period of time when you look at higher time frames when there's more sell pressure than buy pressure. That's all it is. It's not like if you want to be a trader on low time frames, right? Get in, get out of your trades. there's just no such thing as a bull market or a bear market. There's every single day that you're trading, and each day is separate. And you're entering trades and exiting trades. Now, if you're holding positions as an investor and you want to think of the market as bullish or bearish because you're holding long-term positions, that's fine. That's not trading. It's investing. Whole different thing. Yay. And good for you. And that's fantastic. Holding is great. It yields some wonderful returns. You probably should keep it up if you've already made a lot of money doing it. Who knows? Talk to your financial advisor. That's not me. Right? But this grand prognostication that we're seeing, that Bitcoin is finally having all of the indicators, lagging indicators, pointing in the direction that suggests that it's going to start kicking up again very soon, if it's not already continuing from the current bull market, as they call it, since January 1st, 2023. So we took a little pause for about a half a year, or 8 months, 7 months since the most recent all-time high in the middle of March. All the indicators are now reset, according to these TA people. And traditional TA people are saying, oh, it's ready to kick up again, and we will probably hit 100K or more by sometime in November or December. Guys, girls, men, women, we are at around 60K. The price is right now. Okay, 100K is a massive move. Doesn't mean it can't happen. It's certainly within the cards. If you've been looking at the VEPs, you know that on the 7-day RMLR, the 3012 RMLR, to which it is currently in mean reversion, is currently at around 117 grand. And staying somewhere in that area, if it can hold up and start moving back to the upside, that RMLR looks set to stay within the above the 100K range for the next good number of months, all the way out into March, April, even May of 2025. Does that mean that we're going to have to reach it by November, December? No, it doesn't mean that at all. It could. We could. Definitely there are probabilities to go that way, right? But when people are juicing you up to trade on a given day, it's going to 100K by December, so act now, long that over leveraged position. You got to look at the lower time frames to know what's actually happening now. Because what does it matter what happens in December if you got wrecked in the beginning of October because you decided to long when the asset was going down and you took an over leveraged position when you shouldn't have taken one at all? Right? Think about that. What good does that do you? How does it help you as a trader? And the answer, of course, is it doesn't. Right? If you're trading something like Bitcoin or whatever, crypto, and you're expecting significant gains by the end of this year, great. You're thinking long-term as an investor, thinking maybe in a few months it'll be worth more. Okay, great. Day to day, there are changes that happen. Moment to moment, there are changes that happen. Every single order in the order book changes the status of the information. And if you look at exchanges that are popular, the order books are consistently flowing with orders. So the information is constantly changing. And the direction of the asset is either in distribution or in mean reversion. Right? The returns are either in distribution or mean reversion, and price action is just following those returns. So all these guys and gals saying, October is going to be amazing and November's going to be great, and by November, December, we're going to break 6 digits finally, and then it's off to the moon, and then we're going to have a great bull run and all of 2025 some point in 2025 it's going to end, but it's just going to be gravy until then. Do you realize that every single time there's even a small, like 15-minute candle, or even 1-minute candles that pull back a little, millions of dollars get liquidated because people longed the top or shorted the bottom at over leveraged positions. And the moment that asset moves even 1%, which it very often does, even on a 1-minute candle, it can do that, especially when there's a lot of activity. Even a 0.5% for a lot of people is enough to liquidate their positions. If they took like a 100x position and they did a market order, well, even if they're lucky at a 0.5% trading fees, then 1% or 0.5% move will get them completely wrecked. Even if they got in 0 trading fees, a 1% move will get them wrecked if they took 100x leverage. And you know what? There's a lot of people who do. How do you know? Look at CoinGlass. Literally look at CoinGlass. Look at the liquidations heat map or the liquidations chart. It shows you how many longs and shorts positions on Bitcoin or ETH or overall crypto got liquidated in the last hour, 4 hours, or 24 hours. It's insane. You're typically seeing an entire stadium full of people. Sometimes a small stadium, sometimes a large, very large stadium. Right? Sometimes literally more than 100,000, almost 200,000 people a day getting liquidated. We're talking hundreds of millions of dollars of capital a day getting liquidated. What does that mean? That means people are getting wrecked. Right? They're getting wrecked in what should be relatively easy salad days. Why is it relatively easy? Well, if you didn't take over leveraged positions and you look at the time frames and do a proper workflow, right? And you're not greedy, and you take profits on your trades, as opposed to trying to swing trade an extremely volatile asset that is continually distributing away from the mean and mean reverting. I'm talking about the returns and the price action that follows. It's, A, it's no surprise that this is happening to people. And B, it's a damn shame people continue to do this nonsense and just help themselves to get wrecked. All because they're listening to YouTube Jimmy tell them nonsensical long-term forecasts and getting them all excited like somehow that's actionable information on the day. It isn't. Long-term predictions are never actionable information on the day. Not when it comes to trading. Actionable information on the day needs leading information. Even long-term forecasts, to be accurate, need leading information. And you'll notice these analysts never give you leading information. Some of them will tell you they have leading information, like that guy, Raoul Powell, whoever his name is. He says he has leading information, but it's not. He'll tell you, oh, this chart always shows that from here on out, we're always going up. And that's based on an 11-week lead time of information. That's not leading information. He's making a guess based on okay. The connection here is a bit crazy, so for the next few minutes it might just get wacky. My point is, please do not get suckered in by the folks who are just shilling you. God, that. And I hope that is clear, because that's basically what there is to say about that. Okay? All right. See if I can continue this in a little while. Cheers. Happy trading.